And good morning and welcome to the VSA Capital 5-Minute Morning Miner on Monday, March the 16th. Hope everybody had a lovely weekend and the weather's looking a little bit better for this week, so we should all be in good mood. How are you doing, Paul?
Pretty well, thank you. Pretty well. Nice day outside looks like so far.
All right. I mean, one of the things I've noticed this morning is just about everybody on Twitter has just suddenly noticed that the tungsten price has hit $3,000. Obviously, we've been talking about this now for a couple of years and looking at all the tungsten mines all around the world. So it doesn't particularly come as a surprise to us. And I mean, who knows where it goes short term? You can never tell with these sort of things. But, it's a bit of a bubble occurring now. And my view is that probably towards the end of this year, we're likely to be back down to nearer $600. And if you were certainly looking at valuing a tungsten mine, I think that's the sort of maximum price that I'd want to put in. Now, everybody says there's no substitute for it. Not totally true, actually. I mean, clearly it does have certain qualities where it is the highest melting point, for instance. So it's used in a lot of defense and where you need really hard steel. But in certain cases where you don't need the maximum benefits, you can use molybdenum or tantalum or niobium or titanium or bismuth-based materials. So there are substitutes, and at these levels, the substitutes will start to come in. So I would advise walking with a little bit of caution on this one now. It's got a little bit too hot. That's my view. Do you agree, Paul?
I would say too that tungsten also very much driven in price action by all this war activity going on at the moment, and tungsten being metal for armor, defense, and metal piercing shells and that sort of thing. So you got to be careful here with geopolitical drive to this speculation in the price, so for sure.
But as I say, people will be able to actually, at these levels, they'll start to say, hang on, let's look for substitutes. And there are actually substitutes, despite what people say. Anyway, there we go. Let's turn to the news this morning, Paul. What do you want to start off with?
Oh, we had a pretty stunning PFS and maiden reserve release made by the ASX-listed Mount Isa District Copper Explorer Carnaby Resources. It's a small deposit and would be a small operation, but it's got such good economics and such good grades around it that it's going to make an awful lot of money. Here, it's a 4 million ton open pit at 1.7% copper equivalent and a 4 million ton 2% copper equivalent underground reserve for a 12-year mine life. And the PFS says that it should have an all-in sustaining cost per ton of $9,500.83 per ton of copper metal, and an IRR base case of 281%, and at current spot prices should make almost 400% profit. First production, they'll have a feasibility out by the end of this quarter, and they do want to get first production into sometime yet this year. So definitely one to keep an eye on. And want to mention too that we're aware of several smaller copper deposits like this, what I would call boutique operations, because of the potential for high-grade near-term production around the world. And this is an example of the kind of profits to be made in open pit copper of high grade at the moment.
Well, I mean, the other one where we think there's going to be very high-grade copper will be Tamar Resources, or Tamar Minerals, rather, when they eventually get drilling at Devon Great Consols with double the grades. We're looking at about 4% we're hoping to get there. So that will be interesting when they do start drilling. All right, Paul, keep going. I'll let you choose what you want to talk about today.
Yeah, we also had full year results out from the London quoted aggregates producer SigmaRoc. This is for year ended 31 December. Revenue up by 3.8% year on year. EBITDA up by 16.7%. Earnings per share up by 26% to 10.5 S&P. The only thing that was a little bit down was their pro forma number based on their volume sold, which was down by 1%. But otherwise, everything else clocking over nicely over at SigmaRoc. Again, aggregates producers, when the market's good, the shares do perform nicely over longer periods of time. So keep an eye on aggregate producers for sure. Also want to mention the ASX-listed Centaurus Metals, in which the London private equity group Appian has a significant stake. Glencore has signed an offtake agreement with them on their Jaguar nickel sulfide project in Brazil. That's an agreement for 20,000 tons per annum of high-grade nickel concentrates at 32% grade, and that will be for a minimum of a 5-year period. And that accounts for about 30% of what is intended to be the planned annual production from Jaguar.
Very good. Right, well, we'll call it a day there. That really is a 5-minute morning miner. Thank you very much, Paul. Back tomorrow.
Alrighty, see you then.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.